say money can't buy happiness? Look at the fucking smile on my face.
Yeah, that's my alumni, you know what I mean?
Target locked. Ready to fire.
You can't handle the truth.
Yo, good morning, everyone, and welcome to the Morning Market Report. We got Bitcoin pumping up right now, right there, pumping up for us, and giving us some signs that we may be in for a little move to the upside today. Of course, you know, last week we talked about all the geopolitical tensions that were going on, and yeah, it happened over the weekend, and so we had some sell off in the markets. Guys, we're going to talk about what it means for everything, but most importantly, we're going to talk about the MVP oscillator, giving us some indication that, hey, bottom range may be here and it may be time to shift how we approach the markets. Guys, we're going to break all that down and a whole lot more today on the Morning Market Report. You guys know what time it is. Let's do it. Class is in session, and we're going to have to break it all down for you guys. Of course, we do have some stuff. I am broadcasting from Salt Lake City. I'm up here on the mobile setup. I hope everything works well with it today. We'll see. But so far, so good. And as thumbnail says, we're going to talk about that MVP oscillator firing off a bright green candle. We've talked about this for months, that this is what we were waiting for. It's here now. How do we approach it? We're going to get into that. Guys, also, as always, this show brought to you by Chart Prime, the official indicator suite of winners. If you want to be a winner, check out the link below. That's about all I got on that. Let's go ahead and jump in, though, and give a shout out to the chat. Let's see if this thing works. Does this work? Oh, look at that. It does. We got Loco for Crypto in here. Mike Play. Alexandra G is in here with us. The Mod Queen. Appreciate you being here. Robert Mulligan. Good morning, good morning, good morning. Of course, it's not showing all of the stuff because I'm using a different setup. But, hey, we're going to make it work, right? It's what we do. Shout out to Buck in here. He 100%, I call BS on that one, Piper. It's 100%. It has called the bottoms 100% of the cycle. So, not the exact bottom, but the bottoms, okay? And so the bottom range. And that doesn't mean that we can't still go down a little from here. I'll tell you guys how I'm approaching it. But Bitcoin right now did break through the quantum reactor, which has been rejection zone twice for Bitcoin recently. And we are approaching the dynamic reactor. And we're going to talk about what that means here in a bit, too. Shout out to Mike Play in here. Shout out to, you know what it is. He said, I'm 1 hour closer to him. I'm never going to get that clip. Well, I may, actually. There's some things in the Pacific time zone that I'd like to see. But yeah, right now I'm in the mountain time zone. So Crypto Coin Mindset, Keith in here with us. Ninja Glock. A to Ace said, you got that like button, y'all? Did y'all hit that like button? If you haven't done so yet, help us out, man. It does do a lot for the algorithm, believe it or not. And then who else do we have in here? Oh, Keen Bean. Keen Bean from the Gang. Let's get that sound effect in here. I got all the sound effects. Got them all here. We're all here. So appreciate everyone joining us here. I think that's about it, unless I missed some people down at the bottom. Oh, XYZ, OZYX, and Scar all in here joining us. I appreciate you guys. All right. So let's go get into the news. Let's talk about the news. All the news is fit to be news, and we'll break down everything you guys need to know today. I am going to have to make an adjustment there, it looks like. Why? Because I changed some stuff. And of course, after I set it all up, it's going to do this to me. Let's go there. Crypto bubbles. Perfect. Look at that. All right, let's go talk about the ZO crypto bubbles here. Do I need to bring you over a little bit? I think I do. There we go. Perfect. Okay, we got the stuff going here. Let's get into the metrics first into the Cryptoverse, guys, and talk about what we got going on over here. I want to refresh this and make sure that I got the most up to date on this. There we go. Let's see here. Crypto market cap right now sitting at $2.341 trillion. The total crypto trend on this is coming at $4.941 trillion. That's the fair value. We're currently undervalued on Bitcoin by on the market cap, total market cap, by 52.62% from that fair value. How are we looking on the dollar cost averaging? Guys, this morning, this thing was at 0.299, and I dropped this in the Discord for the Piper plan for our DCA strategy. It was at 0.299, and that makes it a 5x DCA level. However, might do up a little switch on that, being that we now have the MVP oscillator firing for us. So, but if you guys were in the Discord this morning, it was at a 5x DCA, and you would have bought in much lower than we are right now after this little pump that we got going on. What about Bitcoin dominance? How is that looking? Bitcoin dominance is sitting with stable coins at 57.67%. Take away those stable coins, we're sitting at 65.99%. Bitcoin has dominance out of stable coins, has lost that 66 and 67% line, now sitting just underneath it in the 65.99% range. So some money moving out of stables and into Bitcoin dominance. So what are we looking at here? Let's see. Liquidations. Let's talk about that. In the past 24 hours, according to CoinGlass data, we had 99,681 traders get liquidated. Total liquidations coming in at $394.71 million. So that was a large single liquidation order on Hyperliquid of Bitcoin for $6.62 million on a single liquidation. Liquidations are longs versus shorts, I should say here. 24 hour. Let's take a look at this because we're starting to see a shift around here. $32 billion in shorts on the 24-hour, 31.6 billion on longs, meaning more people were filling short. They were selling off. Look at the last hour, though. 7.49 billion in longs now, 6.3 billion in shorts for the last hour. People are starting to flip long here and go bullish. Matter of fact, 31% and 24%. So 55% market bullish right now on their trade setups. Let's go into the X marks the spot. Guys, this is futures were red this morning. Oil was spiking. War in the Middle East is back. Let's have a Monday. This is how everyone was feeling this morning. However, now we have it. There it is from the Kabisi letter. The S&P 500 has officially opened for the first time since the war began. It's down 0.65%. It's even less than that now. S&P futures have already erased half of their overnight losses. If you're calling for World War III, the market respectfully disagrees. It opened all the way down here in 6,800 range and spiked back up and moving to the upside. So fear and greed right now sitting, this is about 2 hours ago. I'm sure it's a little bit higher now, but they haven't put out a new one yet from the fear and greed index on X. But it's sitting at 10. Extreme fear still holding the markets while we're getting this pump. I do think, though, this is going to be higher tomorrow, and we may even be into just fear. Key events this week. Last night, of course, we had the U.S. futures reacting to the Iran situation, and that was at 6 p.m. Eastern Standard Time last night. What happened since then? Well, they were way down, and now they've worked their way back up. Looking over here at the chat. Good day, LMAO. What's up there with the real Ashley Gates? Appreciate you being here. All right. Cool. All right. OC guys in the house. I see you, OC. What's up, bro? Today, we had February ISM manufacturing PMI data. We got that this morning. We're going to talk about that in a bit. Pam's done the full breakdown for me. Wednesday, we're going to get February ADP. That's your private sector employment data. And then Thursday, initial jobless claims. That's your weekly unemployment filings. And then Friday, we're going to get January retail sales, one of those important economic pillars of the economy here in the U.S. Buckle up for an incredibly volatile futures open, which it was, and it shot right back up. Of course, Michael Saylor, he bought the dip, or as I said to Evan Aldo the other day, no, maybe it wasn't him. I don't know. It was one of the people. I said, buy the invasion. And so, yeah, that's played out well. I actually did buy the invasion, and I picked up some more Bitcoin on that hard drop that we had. So Strategy has acquired 3,015 Bitcoin for about $204.1 million at $67,700 per Bitcoin. They currently have 720,737 Bitcoin, given an average price of about 75,985. So still a little bit down on their Bitcoin, but they have bought some more, as they always do every Monday. Gold futures officially rises above $5,400 per ounce amid the war between Israel, U.S., and Iran. Silver prices are nearing $100. We'll take a look at gold and silver here in a bit, too. U.S. Secretary of Defense, I thought it was Secretary of War. Somebody make up your mind. Pete Hegseth does not roll out putting American boots on ground in Iran during this morning's press conference, stating that there are not currently any there, but that we're not going to go into the exercise of what we will and will not do. So I am of the mindset that right now I don't think that we get boots on the ground. but he's not rolling it out. The real Ashley Gates says, followed you from Dylan Chart Hackers. Awesome. Appreciate you being here. Check it out. Check it out. If you enjoy it, hit that subscription and hit that subscribe and that notify and the like and all that good stuff. But welcome from the hackers. Appreciate the hackers being here with us. Vice President Vance, this is what he actually said this morning. And let's back this up here.
I certainly empathize with Americans who are exhausted after 25 years of foreign entanglements in the Middle East. I understand the concern, but the difference is that back then we had dumb presidents, and now we have a president who actually knows how to accomplish America's national security objectives. So this is not going to be some long, drawn-out thing. We've got in, we've done the job of setting their nuclear program back. We're going to now work to permanently dismantle that nuclear program over the coming years, and that is what the president has set out to do. Simple principle. Iran can't have a nuclear weapon. That has animated American policy over the past 130 days. It's going to continue to be a driving force of our policy in the Middle East for the next 3.5 years.
So I will say this: the Secretary of Defense and the Vice President are not on the same sheet of music because he's saying that this is pretty much it. This is what we're going to be doing. Hegseth, I think he's got a little bit more realistic mindset, and he's thinking, look, if they don't hand over their weapons, we can't just leave it in disarray. They're continuing to fire at multiple bases around the Middle East where U.S. troops are located at, and we may have to put boots on ground in order to assist in that transition and hand over to the people of Iran. So I think somebody needs to get the all the band, all the orchestra is not playing the same song right now. Somebody needs to get them on the same sheet of music. So. Of course, the Strait of Hormuz is closed, and this is one of the tension points that I have. It's a conflict data point that I have for my assessment that this is going to play out clean because the Strait of Hormuz is closed. And as many have pointed out, no country owns the Strait of Hormuz. It's an international waterway governed by international law. But ships traveling through the Strait of Hormuz purchase war risk insurance, which means insurance is probably going to fire up. I think that might be one to watch. It's also going to shut down supply routes for goods traveling through the area, manufactured goods, which means it's going to mess with the logistic supply of goods in America. So we have that piece there, and then on top of that, we also have the oil, and that's like 80% of the oil goes through that strait. So higher oil prices means higher goods prices. Lack of supply of goods means higher goods prices, which means we pay for it at the register. That is higher inflation, guys, and we're not seeing a lot of strength in the market for employment. So when I do think that this is going to put a lot of stress and on the Fed to make a decision on rate cuts because I do think this is going to drive prices higher for us. That's what I got there. Let's jump into CNBC and let's take a look at the markets, give this a refresh. And shout out to the real Ashley joining the alumni. Appreciate that. Make sure you get in the Discord. That is where the power of this little membership, this $5 membership, gives you access to trade setups with JR. It gives you OC's analysis. He drops data points in there all the time and charts. We got Dime Boy over there dropping stuff all the time. A lot of members in there. If you got questions on mining, talk to Buck. He's got a massive mining situation going on down in Houston for Bitcoin. And then, of course, the Piper plan for dollar cost averaging, probably one of the most solid dollar cost average plans out there. And I will go head to head with anyone who says differently. But yeah, go check that out. I appreciate you being here. Welcome to the alumni.
Yeah, that's my alumni. You know what I mean?
All right, looking at the markets here, Dow Jones still down slightly, about 0.3% this morning. S&P just under 0.5% down at 0.48, and the Nasdaq rallying back up. This thing was down 1.4 this morning, so it's made a 1% move to the upside. Now down only about 0.37%. Russell 2K only down about 0.1%, but the volatility index, guys, up 10% today. Above 17. Anything above 17, that means you're in volatility. Be careful with your trades. Right now, the volatility index sitting at 21.86. Look at the Europe markets overnight, all in the red. They're going to get hit hard on this because a lot of their oil does come through the Straits of Hormuz also. Asia markets mostly in the red, the Nikkei out of Japan, the Nifty 50 and the HSI all in the red, Shanghai and ASX 200 in the greens. We are seeing a sell-off on the 10-year Treasury yield, but Piper, it's green. Yes, that means people are selling it off. People are getting out of the yield right now of the 10-year bond, and actually, believe it or not, stocks and the dollar both making moves to the upside today. How about oil? It's at $71.50. Same place it was at Friday, but we did have a big change overnight on it of 6%. 6% on the overnight future. So now it's oil sitting at 71.49. And that we were just talking about that. Look at natural gas, though. That line, the LNG, that's a natural gas line that was just hit over in the Middle East also by Iran. I do think we're going to see that get a hit too, which means if you're in energy stocks, be very careful. Energy is going to have a lot of volatility and fluctuation as oil and natural gas finds its valuation in this geopolitical tension that we have. Gold is now sitting at $5,340, up 1.76%. And silver down about 3%, but still holding above $90. Copper is down, platinum is down, and palladium also down on the heavy metals market. Let's look at the crypto bubbles because we do have a lot of green. Guys, this thing was red when I started prepping for this morning's show. It has all turned green here in this last hour and a half. Looking at Bitcoin right now, on the daily, it is up 2.1%. Ethereum is up 0.9%, just under 1%. BNB is up 2.6. XRP is up 0.7. Other big movers in the top 20. Solana 1.5, nothing to write home to mom about there. Dogecoin 1.4, Hyperliquid. I think Hype is going to do pretty good because it is that decentralized exchange native token, and then also on top of that, it is when they fees they burn Hype, which also pumps the price. So make sure that you guys are keeping an eye on that one. It is up 3.6% on the hourly, 2.5 on the daily. Chainlink is up 1.4%, and Canton Network having a little bit of struggle here, but down with 1.6% on the daily, making a rally on the hourly. No other big movers in the top 20, but Litecoin has moved up 2 spots into number 22. Let's take a look at the economic calendar. Let's talk about this for a second because there's some stuff in this report that we need to discuss. So are you going to let me move you? I guess I'll just move it over here. We'll do that. How about that? So looking here at the data points that we have on the economic calendar, guys, manufacturing is still expanding. You can see that on there. S&P Global Final came in at 5.16 and ISM printed 52.4, beating expectations on both. So this is not a recession print. This is an industry is still moving. New orders came in at 55.8, still strong demand, just a little lower than last month. Employment is 48.8, still contracting. So like I said, weakening labor market. So companies aren't exactly out here hiring like it's 2021. Now, here's the part that matters for the markets and the Fed. Inflation pressure is back in the data. So ISM prices paid exploded 70.5. What that is, that's the manufacturers, how much they had to pay to get the materials for producing goods, all right? So it exploded to 70.5. That was way above expectations, and it was the highest since mid-2022. That is the pipeline screaming costs are rising again. And we talked about that you're probably going to be paying more at the register when it comes to the price of goods. And that is inflation, guys. While the labor market is weakening, that's called stagflation. Remember last week's PPI? That report was markets see disinflation is still alive moment. See, disinflation is still alive. Producer costs looked like they were cooling, which is why rate cuts hope stayed on the table. Risk assets could breathe. But today's ISM prices kind of reversed all that, undid the whole narrative, and now we're back to inflation prints coming. Now add the geopolitical overlay with the Iran situation, what's going on over there, and the Strait disruptions in the Strait of Hormuz. Oil and shipping costs don't need permission to jump. Higher energy and freight costs show up fast at the register, first in the producer prices, then downstream into CPI, which is where we pay for it, right? So that is the stagflation risk cocktail. Input inflation is up. Growth is getting pressured by supply chain friction and weakening labor market numbers. So market takeaway, the growth side of the report is fine, but the inflation side is the problem. If oil stays elevated, this becomes a higher for longer setup, and that makes rate cuts harder to justify, especially in the near term. That's the breakdown for this data that came in today, guys. Let's look at the chances of a rate cut. How are we looking now for this month? We have one in March. Let's see here. 97.4% chance of no rate cut in March. Let's go check out April. We're looking at an 85.3% chance of no rate cut. And then June, we're at a 53%. So now, even in June, after the Treasury, the chairman of the Fed steps down, gets switched out, Trump puts his own guy in there. Even after that, we have a less than 50% chance of seeing a rate cut for June. We don't actually see anything that looks like, hey, we might get a rate cut until July now, and that is a 65% chance of a rate cut in July. March right now, though, probably not going to see one, guys. Looking at some articles here, the Strait of Hormuz crisis explained what it means for global shipping. We're just going to highlight a couple of things in here. The escalation war in the Middle East has ratcheted up the fears. Danish shipping company Maersk said in a statement that it would suspend all vessels crossing the strait until further notice. And then also oil going through that area. U.S. Energy Information Administration accounts for about 20% of the global petroleum liquid consumption. Excuse me, I was 20%. So, yeah, we're going to see the prices on oil and shipping both get impacted by that strait closure. What have we got over here also? Geopolitical jolt comes as a fragile time for the stock market. What is he talking about there? Well, he's talking about we were already seeing the Mag 7 fall. We were already seeing some AI bubble fears in the markets. We were already seeing crypto on the downside. And then we get this jolt hitting on this. Don't be surprised if this pump that we get today doesn't turn into a bull trap for later in the week. That is a very good possibility. So I want you guys to be prepared for that. Shout out to Crypto Princess. I see you over there in the chat, lady. Welcome. Lunar Beach is catching up. I'm 10 minutes behind. Told you it was coming. We told everybody it was coming all last week that this was going to happen. Matter of fact, we were talking about, look, they said they're in talks, but you don't move that much equipment to the Middle East for nothing. So there have been, unfortunately, enough outbreaks of the Middle East conflict in the recent decade that they're able to look at all the data and do some analysis, right? Regional military conflicts rarely end a bull market. Indeed, sometimes they've coincided with their start. 1990 and 2003, Iran conflicts, our Middle East conflict, guess what happened? We started a bull market. Of course, those were both coming off of the backsides of very bad sell-offs. I don't think we've had a full bad sell-off like that yet, at least in the stock market. Bitcoin, crypto taking a heavy hit for the past 6 months. The initial retreat from risk assets tend to not last long and has relatively quickly been recouped. So long as the economy was not already in a recession or stocks in a bear market. So stock's not in a bear market yet, and we are not in a recession yet, according to data. So the tricky part now is that the markets have already been caught in an uneasy equilibrium with a clear bullish consensus built on a quickening economy, AI enthusiasm, and clean 2026 policy outlook undergoing persistent scrutiny. I do want to point out something to remind everyone. One thing, though. It is a midterm year. Historically, midterm years have seen a red year for the stock market. As of right now, we're not there. So I still think we have towards the end of quarter two into quarter three, fears that are going to have some sell-off just because of the historical presence of sell-off in midterm years. But yeah, all this happening right where it's happening at could see some market volatility flush it out a little bit. And stocks making the biggest move, of course, guys, Lockheed Martin, United Airlines, Mobil, ExxonMobil. Here's the list down here. Oil stocks all getting a nice pump this morning. Chevron and ExxonMobil gained about 4%. ConocoPhillips was up 5%. Brent crude hitting a new 52-week high this morning on Monday. Tanker stocks shares surge following the eruption of military strikes in the Middle East. These are tankers moving oil. They both up 7%, 6%. Travel stocks all slid. Why? Because they've cut out like 41% of all airlines, all air flights into the Middle East. So these are big sell-offs. If you're looking for something to short, maybe airlines and travel, right? Also, it was energy stocks plunging nearly 17% this morning. Why? Because it's going to cost them a lot of money to get their oil. So And then health and bank stocks. Bank stocks slid slightly. Elevance Health shares shed 4% as the insurer, because they do all of the insurance for all of these shipping companies, taking a big hit there. So that's what we got on news today, guys. I just wanted to break all this down for you and just give you what I'm seeing here. Now let's get into the Bitcoin chart. What are you doing? What are you doing over here? Get back to your normal size. Thank you very much. Trying to manipulate things on just my normal. I'm not on my normal setup. I'm on a travel setup. I apologize. So let's go over here and check out the chat cam real fast, see what everyone said, and we'll get into the Bitcoin chart. I saw Scar say we got one more drop coming. I think that's possible too. And you're gonna see that on the chart when we go into it. Because that's been historically what happens. So we do get another drop to the downside. But right now we are deep in the dynamic reactor. We'll look at that in a second. Did I miss anybody in here? Did anybody put anything out that I missed? The real Ashley Gates wants to see Ave. Ave, we will get in on that one, I promise you. How about that? Since you joined today, we'll get into Ave. All right, let's get over to the charts and let's see how Bitcoin's looking right now, guys. Bitcoin pumping in. We're hitting into the 4-hour dynamic reactor right now. I still do have the red box. This is our last high, and I left it there because back here, that's where I said we would get a rejection, which we flawlessly did. Now, I will leave it at this box there because I do think that I'm watching for a liquidity grab above here. And then if we get a rejection, that will be the time to enter into a short. If we don't, and we actually hold this as support, guys looking to go higher. And this is a 4-hour chart, but let's get into the MVP oscillator on the monthly, guys, because I want to talk about why this thing matters. And you can see we got the light, the mid, and the bright green candles down here on a monthly Bitcoin chart. Historically, this has been where you start to heavy in on your DCA because it means, hey, we might have bottomed. You can look back here and let me get this. Yep, there we go. This is that we had 9 months of these bottom indications previously in the last cycle. If we look at where this first one fired at, we were about right here. We still had a downside move of 32%, guys. However, if you're looking at buying only based on these candles, your average price during this window came in at about 21,600. I think mine was like 21,004 something when I bought the bottom in 2021. 2022, I should say. And so this gives indication, hey, guys, we may not be at the bottom, but we are in the range of the bottom, okay? Look back here, back in 2019, we had 2 months of it. So what you do is, what I was planning to do, 10% in, 10% in, and then the rest of it on this candle. That would have gave you an average price back then of about $3,500 Bitcoin. Man, juicy. Would love to see $3,000 Bitcoin.
Juicy.
Those days are gone, I believe, guys. But yeah, this you can see again though, bright green candles. We have there's your precursor warning, mid, your light, your mid, bright green, right? Look back here in 2015. Again, it gave indication to a low. Doesn't mean that the bottom wasn't in. Well, it was here, obviously. But it doesn't mean that the bottom's in. It just means that the range of the bottom is in. And so, guys, we have to be looking at this and going, this is a good possibility that the bottom is in right now. So how do I plan on going forward with this using the Piper plan, which already gives me weekly dollar cost averaging based on how deep we're going, right? So it multiplies. If your base entry is $100 a week and we're at a 4X risk band, then you do $400 that week, right? That's why you have to this is what I can afford. Cut it down to a fourth of it because we do have a lot of times where you're doing multiple. You still put in all the money. You let it sit there and make USDC, USDC or USDT yield earning. So the extra money is still there, but you go in with the full amount. So if you can afford 100 a week, you might want to do 25 as your base on a 4X week. There's your full 100. On a 5X week, like this morning was, you're at 125. That's where you dip into the other $75 above your base of $25 that you were keeping in yield earnings to add to it, right? So you're still in your affordability rate window. I'm actually thinking that instead of doing my historical way, because I didn't have the Piper plan for dollar cost average before in previous bear market bottoms, I may double my dollar cost average on a weekly basis to align with this. Because, say, for example, just to put this in simple numbers, let's say 10% of your portfolio, dry powder right now, is $200. Okay. Just as hypothetical, 200 bucks. And that would mean that you're going to put $20 in every month, 10%, right? Until there's no more bright green candles. But if you're DCAing and your DCA doubling it, say it, it's was $10, now it's $20, right? It's going to equate out to that on the weekly. So, for example, my personal situation, well over $200,000. Why? Because I sold in October on October 6th. So 10% of that would be 20 grand. My base DCA level is 500 right now because I'm doing it on the multiplier. So on a 5X, it's $2,500 in. That times four is 10 grand. If I double it, it would be in line with the same 10% of my portfolio at the month of $20,000. So I am thinking about doubling up on my DCA weekly, and that will put me in line with starting to accumulate in the lower bright green candle bands. That's the plan. I'm fully transparent here. You guys know that. And if anyone that is watching that is new, always going to get transparency from me. I'll tell you exactly what I'm doing, not financial advice for you. It's how I'm approaching the market. And this is what I plan to do with the MVP oscillator that has 100% accuracy of being the bottom range. Even though we've had a 30% fall from there, that's just going to give me cheaper Bitcoin to buy, right? Because I'm still buying the same amount. So going deeper in that, I'm going to pick up even more Bitcoin per dollar. So that's how I'm approaching this. All the details are in the Discord, and if you guys have any questions, you just let me know. We'll make sure that you guys are tracking, understand how I'm seeing this. But yeah, this indicator, guys, has been an absolute beast of calling the bottom range, and we're going to set it up again here in 2026, just like we did in 2022. What does that mean for this chart? Because this chart says 365 days on average from the top is where we bottom. I think that we get a deep consolidation. I think that we do come up and we get a little bit of an upside move, okay? And then we come back into this range and consolidate some more before the October 2026 area, and that will be where we start to go up. Why do I think that's going to happen? Because, again, reminder, we typically have a red year in midterm elections, and that is coming up this November. At the end of the day, it doesn't matter if it goes up. It doesn't matter if we go down. The Piper plan adjusts for all of that. So if we're picking up more as we go down and the price is lower as we go down, we're doing a massive exponential growth amount of Satoshis into our wallet. So once we get an indication on Bitcoin that, hey, we're now breaking structure. We now have bullish structure on high time frames. Weekly chart would be the indication that I'd look for, meaning that, hey, look, we come back, we get back into above this, show it as support and go there. That's where we have a break of structure from this previous downtrend, right? And that's where I'll start looking at altcoins because they're going to make a good run and I'll start mixing those in. But yeah, this is the plan that I'm doing, guys. This is how I'm going to approach this. The MVP oscillator has not failed me yet. So we'll double up on the DCA levels and let this green candles lead the way for us. So we had a request for Aave. Any questions about that plan, by the way, guys? Let me know in the chat and we'll break it all down. But yeah, I'm just curious what you guys are thinking about that. If you guys have any thoughts on it, I'm caught up. You're talking so much slower now. I rescind my comment from earlier. I thought you were saying that you're always at 100%. Buck, you're a jerk. If you guys don't know Buck, he's one of my friends. He's one of my best friends, and he's a jerk, though. Doesn't change the fact that he's a jerk. Let's go look at Aave here. We'll check it out on Coinbase. Aave, get a nice break of structure. Of course, like I was saying earlier, keep an eye on Bitcoin. Oh, we broke a trend also, guys. If Bitcoin continues to go up, give Aave a run up to about 136 in that range. I would watch for a short between 138 and 136 on Aave. That's what I would do there. Again, interest of buying, if this is for spot purchases, I wouldn't get into any alts until I see strength on the Bitcoin chart. But right now we are above the dynamic reactor. We are breaking a trend line on Aave. I do think that we do run up into the VWAP up here. We got the VWAP coming in here, and we also got a point of control coming in here. So that's what I would watch for on that. So awesome. Where are we at? Top of the hour almost. I've got to go today. If you guys don't know, I'm in Utah to meet with the realtor. There was a family member that no buying right now. Yep, that I wouldn't buy right now. I think that we need to let this thing shake out first, and then we can get into it. But yeah, good call. The real Ashley Gates. Not the fake one, the real one. I am up here to sell a condo. A family member of my kids passed away, and we're going to get this thing sold. So that's why I'm in Utah. I'll be broadcasting live from here all week. So far, it looks like the feed was good. It looks like the bandwidth is good. It looks like this mobile setup is working great. So we'll be here live all week long and bringing you guys at 10:15 a.m. Eastern Standard Time all the markets, the charts, the headlines, the news, and everything you need to have knowledge. Do be watching later on this week, guys. We got those reports coming out. More data. It's going to be. Where's it at? Where's the data at? I got to double check it for you. Wednesday, ADP employment, private sector. Friday, retail sales. So those are going to be 2 more days of data that we have to watch coming out this week. So still have some turmoil. Anything could happen, guys. Iran could do something that just makes everybody turn their heads sideways and go, "What? Why? I did not expect that." U.S. may just declare that they're putting boots on the ground. So expect volatility. Be prepared and be plugged in. And we'll be right here every morning this week at 10:15 a.m. bringing it all to you. So until next time, guys, I appreciate y'all joining me here. Until then, trade safe. Use some risk management. Peace, love, and profits. We're out of here. You guys have a great one.
That's the rap. Chart stack, data never lie. Piper led the mission, OC in the sky. Spaghetti on the screen, but the vision stay prime. Chart prime visual, signals on time. Alumni strong, we built from the grind. Lessons in the market that'll outlive time. Knowledge is profit, you know how we run. Till the next one, stay sharp, get it done.
You can't handle the truth. Emotional, damn it.
We'll see you at the next
Don't
one.
know what the fuck they're doing.
Morning market report out, 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 out.
Boom shakalaka.
We'll see you at the next one. Morning market report out. We'll see you at the next one. Morning market report. Ow.
That was awesome, dude.
Hey, it didn't break. What else you got?